gold got extended up to almost 4,400 and then had a sharp couple of day pullback. But gold is in a powerful uptrend. This is a massive bull market. And it's classic that you have this sharp decline. Almost all of the decline was one day, right? We had a 6.5% drop in a single day. It's gone down a little bit since then, but that was the lion's share of it. And it scared people. More investors are waking up to the reality that, gold has outperformed stocks for the past 25 years. That the thesis behind gold, the investment thesis, is stronger than ever. Central banks are committed buyers. They're de-dollarizing. They're moving off the dollar standard back to the gold standard. They're going to keep buying gold. Institutions have finally discovered gold. So it's a great story. And gold mining companies, gold's not going back down below 3,000. It's not going to get much below 4,000. But even if you think it could fall to 3,000, 3,000 is a great price. I mean, the dollar index back above 100 today, but I think the dollar's headed a lot lower. And I think that's one of the things that $4,000 gold is telling you. It is a warning that there's a problem for the dollar. That's why so many people are buying gold.
Gold's bull market has entered a defining phase. After briefly touching $4,400 per ounce and pulling back sharply, the yellow metal remains in a powerful uptrend, a classic pattern within a long-term breakout. Despite short-term volatility, gold continues to outshine stocks and other asset classes, proving its strength as the ultimate store of value in an uncertain global economy. Central banks remain net buyers, accelerating their move away from the dollar standard and back toward gold-backed systems. Meanwhile, investors are waking up to the reality that gold is not just an inflation hedge. It's becoming the foundation of a new global monetary order. Peter Schiff, a seasoned economist and longtime advocate for sound money, believes this is the strongest gold market in decades. With central banks, institutions, and retail investors accumulating gold, he views $3,000 as the new floor. At the same time, silver's advance towards $60 looks increasingly likely as capital rotates from overvalued U.S. assets into hard commodities. Schiff also emphasizes that miners with record margins could be the best leverage to this bull run. The era of cheap money is coming to an end, and the age of tangible assets is rising. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Interesting that a lot of people are describing gold being in a slump. Gold is above 3,900. A month ago, that's an all-time record high, right? A few months ago, if you'd have told anybody that gold would be at 3,900 and change in November, they'd have been, no way, it's not going to get up that high. All we did is we went a little bit too far, too fast. Gold got extended up to almost 4,400 and then had a sharp couple of day pullback. But gold is in a powerful uptrend. This is a massive bull market. And it's classic that you have this sharp decline. Almost all of the decline was one day, right? We had a 6.5% drop in a single day. It's gone down a little bit since then, but that was the lion's share of it. And it scared people, mainly the people who, got in recently because they saw gold going up every day and figured, well, let me just hop on board. It's going to be a smooth ride. And then they got a big drop. And obviously some people might have been cute. They might have used leverage. Maybe they were in the futures markets. Maybe they had some stops and they got ran. And so, but the psychology, even here, we're at this gold conference and the mood is not nearly as, exuberant as I would have expected. A lot of people are a little nervous, taking profits on their gold and on their gold stocks. The opposite of the Bitcoin conference that I was at in over the summer, where there were 35,000 people, right? We don't even have 1,000 people here. Yeah. There are 35,000 people, and everybody was optimistic. There was nobody that thought Bitcoin could go down. Everybody thought the sky's the limit, we're going to the moon, 1 million, 10 million, bet the farm, mortgage the house, put everything in Bitcoin, right? That's enthusiasm, right? Here, it's skepticism, it's fear. People, yes, they're bullish, but they're nervous, And so I think this is a big bull market. Silver is still around $46, $47. Yes, it's below the $54 that it hit a couple of weeks ago, but it's way above where it was a month ago. It's way above where it started the year. So I think it's just, the trends are intact. We shook out some of the, the new, buyers that, really, were leveraged or don't really have, belief in the trade. So the weak hands maybe have folded already. We worked off an extremely overbought condition. Gold was as overbought as it's ever been. And so that's not the case anymore. And we got this correction out of the way, and we're still at 3,900 because we went up so far so fast. We were able to have a correction, yet, we're really correcting to 4,000. I think 4,000 is about the support. Even though we're below it, it's like 3,000 was support. When we first broke above 3,000, we had several trips back down to 2,900, and then we took off for good. And I think we're doing now around 4,000 what we did earlier at 3,000. Yeah, I'm hoping to attract some of those burned Bitcoiners to have the same, mentality and understanding, wanting to get out of the fiat system. I mean, that's one of the reasons I'm doing what I'm doing at Schiff Gold with T-Gold, which is something I just launched. And people can go to tgold.com and open up an account. But this is where you can buy gold and silver for storage, not to take delivery, so that we could use it as a medium of exchange for payments. And I'm going to be building out this ecosystem where eventually you'll be able to withdraw tokenized gold, which is the same concept as a stable coin, where with a stable coin, you have a third party that holds dollars, and then you get a token that is backed by those dollars. And instead of transacting into dollars, you transact in the token. Yeah. Well, the same thing would happen with tokenized gold. We have a third party that stores your gold, but you get a token that represents ownership of that gold, and you can now transfer any portion of that to any third party and use it as a payment, or you can be paid. So people could use gold as a medium of exchange in addition to using it as a store of value. So we can remonetize gold. And so people who have been thinking about Bitcoin as some alternative monetary system, when that falls apart, hopefully they'll realize that gold can do all the things that Bitcoin promised to do, but can't. Several of the royalty companies I own, Tether's been the biggest buyers. Yeah. They're just, but this money is supposed to be dollars, right? Although they have some gold because they have Tether gold. I was surprised, they didn't call me up and try to buy T-Gold from me, because that's, my website is tgold.com. Yeah. Figure that it could be Tether. More investors are waking up to the reality that, gold has outperformed stocks for the past 25 years. That the thesis behind gold, the investment thesis, is stronger than ever. Central banks are committed buyers. They're de-dollarizing. They're moving off the dollar standard back to the gold standard. They're going to keep buying gold. Institutions have finally discovered gold. So it's a great story. And the gold mining companies, gold's not going back down below 3,000. It's not going to get much below 4,000. But even if you think it could fall to 3,000, 3,000 is a great price for these mining companies because their cost of gold maybe $1,400, $1,500 an ounce. Yeah. That's huge profit margin. There's very few businesses that have margins that high. Yeah. And that's with the price of gold falling. But what if the price of gold just keeps rising, right? The problem for a while for the miners was that even though the price of gold was rising, the cost of mining it was rising faster. Now, it's the opposite. Gold prices are rising much faster than production costs. And so these companies are going to be making a fortune. And that also means a lot of these companies are going to get bought up because the big companies are cash machines now. And what they're going to be looking for is how do we replace our reserves that we're mining? We can either launch some exploration projects and roll the dice, or just buy up some reserves from some of these cheap companies that they're publicly traded. We could just buy them up. And that's what's going to happen.
I think it started.
The gold fund in particular, the symbol is EPGIX. But even my basic strategy, my core foreign dividend pair strategy, is up almost 50% on the year. So that shows you the massive rotation that's been going on beneath the surface out of U.S. stocks into foreign stocks. because I'm tripling the return on the S&P investing outside the US. And this is the first time that I've had this fund that I've beaten the S&P. And I don't think this is some kind of aberration. I think this is the beginning of a trend that will persist for many, many years. And people need to adapt to that and change and move money out of overpriced US stocks into these much better valued foreign stocks, and get out of dollar-denominated assets into assets denominated in currencies that will likely appreciate significantly against the dollar. I mean, the dollar index back above 100 today, but I think the dollar's headed a lot lower. And I think that's one of the things that $4,000 gold is telling you. It is a warning that there's a problem for the dollar. That's why so many people are buying gold.
The cracks in the Bitcoin narrative are becoming impossible to ignore. What was once touted as a decentralized revolution is revealing itself as a leveraged house of cards. Borrowing against Bitcoin to avoid selling has created a fragile system where margin calls trigger forced liquidations and cascade into panic selling. The introduction of Bitcoin ETFs, once celebrated as a sign of mainstream adoption, may now accelerate the downfall as retail investors, unprepared for volatility, rush to exit at the first sign of deep losses. With artificial liquidity drying up, genuine buyers are scarce, and the digital asset faces a liquidity vacuum. As valuations crumble across speculative tech sectors and AI-driven markets, the illusion of endless growth begins to fade. This is no longer about innovation. It's about survival in an over-leveraged system built on belief rather than value. Let's get back to the interview.
The reason they say nobody should sell their Bitcoin is because it's a Ponzi. It's a pyramid, right? You can't, everybody has to not sell. But what these guys are doing is, instead of selling Bitcoin and buying the house or buying the car or the boat or the plane or whatever they're buying or taking a vacation, they are borrowing against their Bitcoin. And they're talking about this like it's this great thing that you don't have to sell your Bitcoin. Well, you don't have to sell your Bitcoin now. You have to sell it later at a much lower price when you get a margin call. Because when you pledge your Bitcoin and it's being held as collateral, if I've loaned you a bunch of money against your Bitcoin, if your Bitcoin falls in value to a predetermined level, I'm on the phone, I'm saying, hey, you need to send me some more money or some more Bitcoin, or I'm selling this Bitcoin. And if you don't have the money to meet the call, I sell your Bitcoin. The problem is those calls are going out all over the place. Everybody that's holding Bitcoin collateral is calling up the Bitcoin whale, or soon to be minnow, and like, hey, margin call, buddy. And they don't have the money. Because if they had the money, they would have spent it. The reason they borrowed against their Bitcoin is because they didn't have any money. All they had was Bitcoin. And so now you have all this Bitcoin being sold into a vacuum. But what's going to exacerbate it, and I've been warning about this since they started, these Bitcoin ETFs, right? Everybody loved them on the way up. But when you get mass liquidation from the ETFs, because the ETF buyers are not diehard Bitcoin maxis. I mean, after all, if they were, they wouldn't own ETFs. They'd own their own Bitcoin. These are just traders or regular investors who bought these ETFs because they were going up and because they were hyped and promoted, and people thought, hey, I'll buy this and I'll make some money. Well, when they see that they're down 20, 30, 40, 50%, people are going to say, I had enough. I'm going to cut my losses and I'm going to move my chips to something else. Well, I think that that's going to happen en masse. I think you're going to see, a year worth of buys liquidated over 1 or 2 days. And the question is, who is going to buy all that Bitcoin? We know who sold them all the Bitcoin. Those are all the whales, the OGs that had all the Bitcoin to cash out. But who's going to step up to the plate and buy that Bitcoin? And by the way, if you go back and look at a lot of the big Bitcoin crashes, all of a sudden there's a bunch of new tethers that come out of nowhere and buy up Bitcoin, right? And people are like, wow, they just counterfeiting these tethers and using tether kind of like the Fed, like to prop up the market. Well, when the ETFs sell, you can't buy with tether because the ETFs can't stick tether into the brokerage account of their customers. So they're going to have real dollars. So you're going to have actual buyers, not fake tether buyers, but real people are going to have to step up and catch that falling knife and say, "Oh, I'll buy that Bitcoin." I don't think they exist. Maybe there'll be some pressure by the Bitcoin community on Trump to get the U.S. government to bail out Bitcoin, right? To fill up the strategic reserve. But that would be real desperation if taxpayers had to come and bail out Bitcoin, especially when Trump's family is completely invested. It'd like be a bailout for his own family to use taxpayer money to buy up, Bitcoin. But it would also, the fact that the government needs to bail out Bitcoin proves that the whole thing is BS. It's not a strategic asset. It's not digital gold. Bitcoin is the foundational asset. And the whole thesis that Bitcoin is the new gold, that Bitcoin's market cap is going to flip gold. And if that unravels, this whole thing collapses and all the investors lose money, people lose their jobs. So I think it's bigger than the .com, for sure. I don't know about whether it's bigger than housing and all the money that was borrowed there, but it's certainly bigger than the .com. And when the .com bubble burst, we did have a recession. We didn't have a financial crisis, but we had a recession. And I think there's more malinvestment, more misallocation of capital. But it's not, obviously, if it's only the Bitcoin bubble that pops, that's one thing. But what if the AI bubble pops? What if the whole tech bubble pops? Then you're talking some serious shit, right? Because if Bitcoin is just kind of a barometer of the appetite for risk, and if it's like the canary in the risk coal mine, and Bitcoin is like the subprime, right? And then the rest of the mortgage market. So we can see, look, we had this morning, Palantir came out with good earnings and they still crushed the stock. So who knows? Maybe people are starting to come to their senses on these valuations. The whales, although some of the whales are relatively young, but they're probably in their 30s and 40s because they bought it when they were younger. But I'd say the big money that controls Bitcoin, are much older. I'm not worried about the 20-somethings that lose all their money. I am more worried about the 60s, the retirees who got suckered into this in their IRAs and stuff like that. That's going to be a real problem. I'm also hoping that Bitcoin doesn't tarnish the whole idea of sound money and limited government and capitalism, because my message, and it's not just my message, but it's the message of freedom, Austrian school economics, sound money. That message was adopted by the Bitcoin community and used to promote Bitcoin, right? So all the things that I say, and then I use that as a reason to buy gold, the Bitcoin promoters say the exact same thing. In many cases, they just plagiarize me. I hear my exact words being spoken by all these guys, right? I know they're getting it from me because they'll use my analogies. But then they'll say, and this is why you have to buy Bitcoin, right? So I'm hoping that people that get burned in Bitcoin and lose their money don't, basically think the message was wrong. It was right. They just did the wrong thing as a result of it. So, yes, fiat money is bad. The Fed is bad. But just because Bitcoin collapsed doesn't mean that they were wrong. That the Fed is good. That there's no problem with fiat money. There is. There's just also a problem with the Ponzi schemes and pyramids. And so I hope that that isn't lost in it. And I've always thought from the beginning that the government would end up seizing a lot more power because of all the losses in Bitcoin. Although now with the Trump administration, that may happen in the next administration. Because they're gonna ride this ship down to the bottom of the ocean.
The growing instability in speculative markets is revealing the fragility of the so-called digital revolution. The massive leverage built into Bitcoin's rise is now becoming its greatest threat. Borrowing against inflated assets rather than realizing gains has left many exposed, and as prices fall, margin calls begin to unwind years of paper profits in just days. When liquidity vanishes, the same tools that fueled the boom, ETFs, borrowed positions, and synthetic tokens become the accelerant for the bust. The selling pressure builds, confidence breaks, and what was once seen as unstoppable innovation turns into a scramble for the exits. Behind the scenes, this isn't just a Bitcoin story. It's a symptom of an entire financial culture addicted to risk, speculation, and the illusion of safety in artificial liquidity. The lessons being learned now will likely echo across other overheated sectors, from AI to tech equities, as valuations normalize and capital seeks stability once again. Cycles like these always end the same way, with complex assets. Stay alert, stay informed, and keep your focus on what truly preserves wealth. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.